Can you day trade crypto? In 2023, the cryptocurrency market experienced a staggering $1.4 trillion in trading volume, underscoring its immense scale and liquidity. Additionally, a 2022 study revealed that approximately 16% of Americans have engaged in cryptocurrency trading, highlighting its widespread appeal. Day trading cryptocurrency involves buying and selling digital assets within a single day to capitalize on short-term price fluctuations. This strategy appeals to those seeking quick profits from the market's inherent volatility. However, it is essential to understand both the advantages and disadvantages associated with this approach. One of the primary benefits of day trading crypto is the potential for significant profits. The cryptocurrency market is known for its high volatility, with prices capable of swinging by 5 to 10% within hours. This volatility can create opportunities for traders to earn substantial returns in a short period. Moreover, the 24/7 nature of the crypto market allows traders to engage at any time, providing flexibility and the ability to respond promptly to market movements. However, the high volatility that presents profit opportunities also poses substantial risks. The same price swings that can lead to gains can also result in significant losses. Many individuals have experienced financial setbacks due to the unpredictable nature of the market. Additionally, the lack of regulation in the cryptocurrency space can expose traders to scams and market manipulation, further increasing the risk. Another advantage of day trading crypto is the potential for diversification. With thousands of cryptocurrencies available, traders can spread their investments across various assets, potentially reducing risk. This diversification can be particularly beneficial in a market where individual cryptocurrencies can experience significant price movements. Conversely, the complexity of the crypto market can be a disadvantage for day traders. The rapid pace of market changes requires traders to stay informed and make quick decisions, which can be stressful and demanding. Additionally, the need for continuous monitoring of the market can be time-consuming and may not be feasible for everyone. Tax implications are another consideration for day traders. In many jurisdictions, profits from cryptocurrency trading are subject to taxation. Traders must maintain accurate records of all transactions to comply with tax regulations, which can be burdensome and complex. In conclusion, while day trading cryptocurrency offers the potential for significant profits and the flexibility of a 24/7 market, it also carries substantial risks, including the possibility of significant losses, exposure to scams, and the need for continuous market monitoring. Individuals considering this approach should thoroughly assess their risk tolerance, invest time in understanding the market, and be prepared for the complexities involved.